Good evening, everybody. At least it's warm enough to have the doors open tonight. All right, we had a good day in the market. Not unexpected. Well, not unexpected in the sense that it moved in the direction that we would expect it to, but definitely not with the magnitude today of what was expected. But we could see the evidence building up. We had a piercing signal, support at the 50. That alone is observe the obvious. The obvious was that the buyers were stepping in back at the 50. So the assumptions that we can make is when it came up through the 50, tested it once, tested it twice, supported, where do you think the next target's going to be? Probably up here, which means they're going to get pretty close to the 200-day moving average. We can see what happened with the S&P 500. Sideways, but now they've gapped up to where they're just above this level. Still would suspect some more upside. And here's the strong one, the NASDAQ. You can see how the trend is still in this trend channel. I can even draw the trend channel. So whether you're looking at trend channels or just looking at the market, you can see that the uptrend is slowly moving up. Now, that doesn't really matter a whole lot if you're a candlestick investor. What that tells you is if they're not selling this market off, then scanning for the strongest bullish charts is the right strategy at this point. Let me just take a quick gander over here, and we can see what's happening in crude oil. Whoops, crude oil is now above $33 a barrel. So everything we're witnessing, and again, this is kind of reverse engineering, but the strength in the Dow is overriding all the experts' analysis that we're probably heading lower, that this economy is still going to be in bad shape when and if the virus ends. We're still got plenty of unemployment, blah, 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 blah. If you listen to that all day long, and if you listen to the experts that say we're not participating in this market, this is, and I think even one of the major magazines or the Washington Post said, why are all the stupid people buying in this market? That's true, Bill. The market doesn't care what everybody says. The market's going to do what the market tells us it's doing. So this is where I'm not being cynical, but this is why I keep the sound off on the financial news stations all day long, because whatever they're reporting is hindsight. I want to just see what people's actual decisions are. So we can make a relatively decent conclusion to say we're not selling off in this market. We might not be out of the mode of up one day, down, up, down. So I wouldn't be surprised if we don't see it down tomorrow. But what that still tells me is that I want to see what each individual chart is doing based upon the market at best just moving sideways instead of down. Well, yeah, meaning the individual investor, Jay. That's what always kind of makes me smirk, Because remember, during the flash crashes we've had in the past few decades, it's the retail, the common man, the individual investor that was trying to get in on the pullbacks. They weren't the ones that were panic selling like the institutions. So there's one major fallacy, which I'll take a little bit of time to explain. There was an old adage that says when the public starts buying, that's when you want to start selling. Well, remember, before we could trade online, the only way you got information about what to buy and sell was through your stockbroker. So when your stockbrokers, who don't necessarily, a stockbroker doesn't necessarily mean they've got expertise in market analysis or price analysis. They're just like a Xerox salesman or a used car salesman. They're selling stocks. So when did everybody get confident to buy? When the stockbrokers were confident to call up people and say, everything looks good, let's buy, which was usually at the top. Couldn't the Dow be considered a scoop pattern? Yeah, it fits into that category, but I usually want to see this as a much more flat handle. So anyways, that was a long dissertation to say it used to be when the public started getting in, that was the time to get out. Remember what the philosophy is of most institutions. They're trying to buy stuff that is not real wild or speculative so that the rate of return is decent year after year. And I say decent. I can remember what the markets at some points being up 25-30% for the year, and the major funds were up 10%. Oh, they were giddy that they did so well. And I'm thinking, well, if the market was up 20 or 30%, how come you're so happy with a 10% return? Anyways, so I forget where this is all going to. Right now, we have, ever since we saw this right here, we haven't had anything to tell us there was any major change of investor sentiment since that reversal. If you were trading crude oil, ever since you saw the buy signals in the oversold area, it's just continued to go higher. So this is, that's what I was getting back to, is where some of these experts saying that they aren't getting in because this market should go much lower. Maybe, but if you've missed out on a 20, 30, 40% increase in your portfolio while you're waiting for it to go lower, something's wrong with your trading strategy. So a very bullish sign. The more people that says the market's going lower, the higher it's going to go. Okay. Some very high let's do the ones that we started picking up nail today. Again, kind of that scoop pattern. So there's plenty of scoop patterns setting up right now. And nail is at least a little more energetic because it's a triple leveraged indicator or ETF. Which means, let me make this smaller, this gap right here is a viable target. So did finally buy some stock near the end of the day, but bought some calls earlier. And unfortunately these calls, the spreads and the calls are kind of hard to get into. But this is where I was telling the options room that sometimes you just pay up for those calls. I think at one time, the ones that I was looking at, the June 65s, they were bidding. At one time, they were bidding $1.75, asking $3. Lots of room in there. But when I started putting the bids in halfway, the bid started moving up. So eventually I paid $2.80 because the bids now came up to $2.60. Didn't want to pay that much at the high end, but it was still a function of, I said the 65s. That was not right. The 21s. So paid up to at 280 for the 21s, because if it does move up here, doesn't matter whether I paid 240, 260, 280. If they go up to where they're now trading up here at 25, it didn't matter what price I paid for them. But anyways, that was a long dissertation to say that when you see these pattern setups, especially in this case a leverage move, that's a good indication or good probability it's going to be heading higher. So the patterns are what allow you to make at least a logical assessment of not only which direction it's going, but the magnitude of the move. There's a resistance level right here. This is on ENPH. And so what do we know about our patterns? No, pshaw. We've got a J-hook pattern. What's the J-hook pattern imply? That this wave right here is going to be the same as this right here, which tells us what about this resistance level? It's not going to act as resistance. We're going to be in no man's land up here, getting potentially a good price move. So this is what we would call a 2+2, that if we can see where the breakout level is, we can see the pattern setting up. Now we can see they gapped up through that resistance level, creating a J-hook pattern. Got a good probability we're going to be heading higher. I'm going to run through the ones we have been in for a while. Here's PGTI. Look at the kicker signal that broke you out off the 50. Kind of a fry pan bottom. There's a gap right here. So which ones do you get in when the whole market is moving? You get into the ones that have the strongest upside potential. Another little J-hook pattern gap up on Matador. You can see this one's been working well for us. Now it's got new energy in it. Still has the prospects of coming up to the 200-day moving average. Moving from here to here is still a good 65–70% upside price move. VIAC. Another one that has gapped up, bounced again off of the 50. I don't know, there's on a 200 up there. But if this breaks out, it's got some good running room. So we're trying to find the ones, again, that have the patterns that do two things for us. Produces the probabilities of heading in the right direction that we expect, and with the magnitude much greater than just an uptrending stock during an uptrending market, that we can calculate how much our upside potential is. Breakout today on MAG. Even though it opened and traded lower, what it tells us about our resistance level right in here. It's in the next move to the upside. INO. Still watching this to see if it can break out through the top of this wedge formation, giving us also a potential of a J-hook pattern. Notice the indecisive trading down here, and then a gap up through the T-line, stochastics coming up. If they've got enough juice left, which they do in the stochastics, to get you up here to nudge this level, now you watch to see if they can break through that level. If they do, more upside. MPlex, same scenario. It's in a fry pan bottom J-hook pattern breakout. Another one that if it trades positive, where's our first target? Up here at the 200-day moving average. And CDLX, right there at the breakout level. Look where your fry pan bottom type pattern started. Right about there. If this gets going, where is it likely to move to? Where everybody else is watching, up here to fill that gap. So everything that we try to look at is based upon what is the pattern and what is everybody else watching. So if you're right at breakout levels, this is not good. Look what this one did. Domo came up through the 200, pulled back to the 200, bounced off the 200. What do you think everybody is watching this one thinks about the 200? It's acting as a support level. It's likely to go higher. And Logitech. There's your steady Eddie. 45 degree. There's your steady Eddie. Fry pan bottom staying above the T-line. Now maybe a belt hold. So where's the logical place to put a stop? If they open it positive and trade positive, you're all right. Probably wouldn't want to see it come back through the halfway point of this candle. That tells you the sellers are still there. So your stop losses should be at places where it shouldn't trade if it's still in an uptrend. We can see what happened to Netflix. It's right here at the breakout level. Still with the piercing signal off the 34. You stay long on this one. Where's your stop? You don't want to see it close back below the T-line. If it closed back below the T-line after the doji today, what's that kind of telling you? That this level is acting as a resistance level that everybody is watching. So we know what the strategy should be. If it starts trading lower tomorrow, get ready to take some profits. And NVIDIA gapped up today. Look at the little J-hook pattern right on where it topped out before. Told you what's going higher. You're in the overbought area. You did a doji. Still pretty strong. But where would you put your safety stop? Where should it not trade? Probably right here would be a logical place. But if it came back down through there, the profit taking has started after that doji gap up. Apple, very nice looking chart. What do we got going on? Look at our first J-hook pattern right here at the 50. Look at the, came up, filled this gap. Look at our second J-hook pattern. If this trades positive, where do you think it's going to go from here? Wave 1, wave 3. Amazon, not anything real spectacular until they can get it broken out through this level. Now you have wave 1, wave 2, breaking out into wave 3. So if you're long, you can stay long. Just don't let it close below the T-line. And Tesla, also right up here in the breakout area. It opened higher, traded lower, but it's still above the T-line. Still looking for the breakout. All right, so we're starting to see some pattern setups. Look at Sabre. Look at your Morningstar type signal. Flat handle. You could be buying this one on positive trading tomorrow. What's your upside potential? There's a gap up here at the 200. Well over 100%. So why do we point out that it's well over 100%? Because if you see a good chart and it's got an upside potential of 8%, or another chart that has an upside potential of 80%, obviously you want to go with the one that has the bigger upside potential. Look at your best friend gap up on Rambus. Nice J-hook pattern setup. Apache, little mini scoop pattern. a gap up here to the 200. And CYH, left-right combo, gap up. Kind of a little mini scoop. Now if it breaks through the 50, you can probably see it move up here where the kind of a flat handle, it's not a real flat handle, it's kind of a little wedge, but the breakout should be pretty strong if it gets up through that level. FedEx, wee little mini scoop, but there's your best friend. Off the 50, watch to see if you don't have good running room up to the 200. Another little scoop pattern on PDCE. Where do you think the next target could be? Whose handwriting is this? EXPI. Yep, up to the 200s. Lots of them bouncing off the 50. Look at the scoop pattern right here on this one. The 50. There's your next target. What happens when it gets there? You just see whether there's enough to push it through. So you get the slingshot effect of the scoop pattern. Another one. Surgery Partners, SGRY. If this one opens positive, what's it doing? Coming out of a little scoop pattern, breaking out of this level. Where's your next target possibility? Right back up into this trend. So here's where you can put the probabilities greatly in your favor. Look at the scoop pattern on Callaway Golf. Morningstar signal right off the 50. What's our normal support and resistance movements of investor sentiment? They come up through a resistance level. What do? They come back and test that resistance level to see if it's going to act as support. Do we think it's going to act as support? Well, we see a Morningstar signal that gapped up, closed above the T-line, gapped up again. If this opens positive, where do you think the slingshot effect is going to take you? At least up here to the 200-day moving average. So why is this a little bit more revealing? Because you can see smack dab on the support of the 50. And is that anything magical? No. Human nature looks at it and says, oops, it's pulling back. I'm going to see if it's going to act as support. Oh, it acts as support. I'm going to start buying this because it shows me the 50 is acting as support. We can see immediately what their decision making was at that level. Same scenario here on fun. You can see how you had some doji bullish confirmation off the 50. Where do you think everybody else is now watching? All the way up here to the 200-day moving average. Put a little star next to that one. Same scenario on PBF. PBF, same scenario. Supporting on the T-line. Which one was that? MT, SGRY. Yeah, you're right here. So why not just wait, see if it opens positive and starts trading positive. If it does and kind of breaks out through this level, that's telling you this little scoop type pattern is confirming. Pin interest. Morningstar signal. Smack dab off the the 50. Closed above the T-line today. Is this a big price move? Not huge, but it's a decent, what would that be? 4 points on an $18 stock. That's almost a 17% move. And then Jim, did you try to send a message? Oh, okay. All right. I saw your message box flip up, and then you were gone. You were lost. LIND. Another little scoop. Looks like a hammered doji sandwich. Lots upside. There's your first target, which is still a good 75% upside potential. So again, the added benefit is being able to see exactly what's happened when they come through as resistance. They see if it's going to act as support. If it does, everybody's watching and saying, yeah, it's acting as support. Let's buy this. We can see immediately that they've started buying. So which sectors are acting well? It looks like the home builders or the Home Depots. Lowe's. Whoops. Toll Brothers. There's another. Bounce off the 50. Potential target. We little teeny gap right there. Pulte Homes. Another one bouncing right off the 50. And Beazer Home. Same scenario. So what's that telling us? They're buying the homes or the home builders. Why? Have no idea. Today the statistics came out that house sales dropped by 20% or mortgage. There's some bad statistics. But you look at them and say, that big deal. We're watching to see what they're actually doing. They're actually buying these stocks. Another J-hook pattern, TRIL. Where do you think it's going? First testing there, and if it breaks out, that's true too. And did this close right as a doji right here? All right, what's our doji rule? It's going to move in the direction how they open after a doji. If they open this positive tomorrow, what do you want to be doing? You want to be buying immediately, the doji sandwich breakout. Yep. TVTY. Yeah, look at your little Morningstar signal, best friend gap up. I would suspect at least coming back up to test this level. And then if it gets through this level, don't want to do that. You're in a gap area, taking you up to the 200. All right. Oh, I didn't put up APT. APT had a good chart. It looked like we had a good kind of wedge breakout right in here. It backed off today. But what was the one thing? I was ready to close this out, had this closed down here. But what was our one indicator that just seems to act like a natural support and resistance level? The T-line. It closed up here at the T-line. Now I can make a better decision tomorrow. If they open up positive, we're still in the breakout mode. Why is this important? Because people like buying the wedge breakouts. Or there's a whole group of people out there that will buy a wedge breakout. Let's remove that trend. Uh-oh. So look what happened on this one. Look what happened on the wedge breakout on this one today. John, because the day was not over. Anyways, this is BNTX. I'll go right back. Let me do one more here on the wedge breakouts. Oh, man. What we got going on here? Kind of a wedge breakout. Oops. Don't do that. Oh, this is... And look what it did. Best friend, gap up, through the 50, out of the wedge. What's that tell us? Remember what happens after these type of moves? They usually go flat for quite a while. Then they start back up again. Not a real great, nah. A wedge you should be able to see pretty almost instantly. This is just an uptrend. So why didn't we sell APT early this morning? Because it was here. And which way did we think it should be going? Well, it broke out through a wedge off the 50. What was the worst case scenario? At the end of the day, it was probably still going to be here. Then you could have, no, you got stopped out? All right, but take a look at it. Remember, if you get stopped out for whatever reason, and you take a look at your chart again, that wasn't right. Because what did this tell you? Remember our delta force analysis? That when this broke to the upside out of the wedge, there was that little explosion. Now we're waiting to see what the rest of the results would be. So what will I do with this one tomorrow? Darn, I'll get rid of this chart. That's what I will. It needs to open positive and trade positive to stay in it. Kind of had a wedge right here, yes. Then there was I think this one, is this the right wedge? How come these lines are staying on here? They're supposed to go off from one chart to the next. But you can see kind of a resistance level right here. And then you go back to your normal assessment. When it gapped up here in the overbought area, what was your first inclination? Put a stop in. If it opened and traded higher, you put your stop right here. If it opened and immediately started selling off, you might take off half the position and you put your final stop at the previous day's close. Oh. John, yes, that's the fear, is that you think it's going to keep going down. Which one were we looking at? Codex? No. APT. It's down here. And did you see any news on it? Nah. But it's already down here. We've already made an assessment that when it broke out of the wedge off the 50, it should be going in this direction. Now it's down here, and it should be going in this direction. If it stays down here, it didn't do anything. You close out the position. We're waiting to see if what our initial assessment was, the wedge breakout, is confirming. So, John, how many positions did you have on in your portfolio today? How to enter a trade with chart like this? Did I miss your answer, my question? I don't know. Did I miss your question? Let's see. How to enter a trade with a chart like this. Now we're looking for the results of, you wouldn't have gotten into this one unless you saw it during the day. Somebody said, oh, look at this one, it's up big. When would you see this? You would see this at night when you did your scans and said, oh, this is a big price move. Oh, look at there. Look at that little wedge. Look at my best friend. Now I'm starting to think about buying it. Where's my upside potentials? Well, it's already traded up here at the 55 level. It's already traded up here at the 70 level. And it looks like it's broken out of a wedge, fry pan bottom, did it with a best friend signal. What should I be looking for? Probably at least a 45 degree. So we often get the question, well, how did we know to buy this on this big move? You didn't. The big move is the message to start buying. That is the signal. On APT, you could have, yes. Because what we were looking for is this. Because you had a bearish Harami, but you still had the wedge breakout. So if I had been trading the stock, I was trading the options, and the price of the options dropped so fast, so far, that I just said, well, keep it and see if it comes back. But if I don't own the stock, let's say I bought right in here, and it opened and was trading down here, yeah, I would have closed it out. But that wouldn't have kept me from buying back in here if tomorrow it opens positive and starts trading positive. Because why would we buy it back? Because we had a wedge breakout, which usually implies there's going to be a lot of upside. All right, you had 5 positions on. All right. So if you have 5 positions on, this is what I was kind of explaining in the training session this weekend. If I've got 10 positions on, and I've got one that's backing off but not really telling me anything, more than likely the majority of the other 9 are doing well. So my portfolio is still trading positive for the day. So sitting there, I've got a positive trading account. I've got one that doesn't look good. I'm still going to wait to the end of the day to see what to do with it. Yeah, you could also have done that too. Put your stop right on the T-line, that if it came down through there, you stopped out. Then if it came back up, you buy back in because it was telling you they weren't going to close below the T-line. VIR, if you happen to have seen the best friend signal. Yes, let's make this big enough. If you were watching this for some reason and you saw it gap up, yeah, you could be buying it. And how would you buy it? If it gapped up and started moving positive, you'd go to your 10-minute chart and say, oh, I'm going to get ready now. I'm not going to buy just yet. Whoops, now. Hey, now I'm buying because it's gapped up. I could be buying here. I could be buying here. Wouldn't be buying here. Wouldn't be buying here. Maybe buying here or maybe buying here. But if it's pulling back and I haven't got into it, I want to still see that they come back and would be buying it again on the 10-minute chart. Do you place your stops on every stock in your portfolio every day after the close or only when needed? Joseph, usually only when needed because I'm sitting here watching it all the time. Yes, so when you get, if you figure out that your stops are too tight, that, I'm trying to figure out one. If your stops are too tight, then you still have the, you should have the wherewithal to say, oops, I got stopped out. I thought it was moving in a particular direction. This is not a good one to illustrate. I got stopped out because I put a stop below the halfway point of this candle. So I'm out of the trade. Oops, now it's moving back up. What's my assessment? If I cut the chart off right there, which way is this stock going? Could be going back down to the T line. It could be going down here. We don't know. We can anticipate. And so next day we say, oh, it's supporting. It's still supporting. Now I know I can be buying back. So if I close out here, I don't have any qualms about buying back here because I know which way and what type of pattern it's setting up. So don't let being stopped out be your ego killer. Say, all right, I got stopped out. Let's watch to see what this price move is doing. Now, there's also times where you might get stopped out. Say, should I buy back? Well, maybe you're better off finding a chart that looks like this someplace, or a chart like this where you're coming up out of the oversold area versus buying back in the overbought area. Do you see any drawback in putting the stop at all times on stock and options? No. I do it I don't do it all the time because I'm usually sitting here watching, and if it starts doing something like I know it shouldn't be doing, I close out the trade. So there's a difference between putting a stop in because you can't sit and watch it every minute or every hour of the day. Let's say you're having to head for work and it's going to take you an hour, hour and a half before you can get back to a screen. Yeah, before you leave, you say, all right, I'm going to put a stop at XYZ. If it comes down through there, I know I want to be out, and I'll take a look at it when I get to work. When a stock breaks out, how do we know if it could temporarily pull back to T-line or goes back up straight? We don't. So if this is a question, should we stop out or wait to see if it's going to hold the T-line? We have no idea. Why take the risk? Close it out, and then if you see it's holding the T-line, and you can see what type of pattern it's setting up, buy it back. There you go, Jim. That's the way to do it. Okay, let's see. Where are we now? So there's your cup and handle. Look at your fry pan bottom, breakout, failed. But now look where you are. What is this signal right here? There's your Morningstar signal. There's your doji. If this opens positive and trades positive tomorrow, what type of signal is that? There you go. The McMuffin. And what do we know about the McMuffin? It's just an extremely high probability trade because the Morningstar signal itself is a strong reversal signal, one of the 12 major signals. We know it's usually going to produce upside. The doji sandwich. What do we know about the results of a doji sandwich? More upside. So when you combine the two, it's just a double bonus that you're going to have more upside. Then you add the fact that the Morningstar signal occurred right smack dab off the 50 and now it's closing above the T-line. That's called convergence analysis. All the pieces of information that you can see, it makes for a strong reversal or converging all in one spot. The probabilities of more upside is just a high probability situation. Another Morningstar signal on Craton. If this is wave 1, where do you think wave 3 could take you? Pretty close to the 200-day moving average. Some of the airlines, AZUL, starting to come back. Now it still needs to break this downtrend, but if it had a little kicker type signal, when I say kicker type signal, it's still a kicker signal technically, but a good kicker signal would have been a bigger red candle than a big green candle. But the fact that they gapped it up and took it in this direction tells you they are taking it up. So you want to see what happens when if it can break out through that level. Spirit Airline, another little Morningstar, best friend, gap up. Where do you think the next target's going to be? Right here, not that far away, but at least you know it's moving in the right direction. Is the 50-day moving average too close to buy a formal rec? Okay. Steve, let's hang on to all these until we get to the, yeah, it's, right now, well, you could be buying it because it's a best friend, but then you're watching this level, which still puts you right into this range. So it doesn't have a huge well, I shouldn't say that. If it goes to 650 from here, that's a 15% upside. And then Hawaiian Air, there's your best friend breakout through the 50. Where's your potential target? Up here, a decent percent move. We need to name a signal the Big Mac. All right. There's your doji sandwich. If it opens positive, what's it telling us? The 50 and the 34 are not acting as resistance. They might be breaking out through this range. Another target up here. There you go. Yeah, having 14 days quarantine in Hawaii. Except I spent 10 days out there one time. Man, did I get island fever. Doji sandwich on our HP. Hospital, you don't need a hospital. You just lay on the beach and heal up. Doji sandwich, look for a breakout on this one. MEOH. MEOH, I did that right. Another doji sandwich. Trying to break out through here. If that one breaks out, we've got a lot of running room. Let's see how much running room. Now there's their first, the gap right here, which is right where it is, up here. So little scoop type pattern up through the 50. Where could your slingshot effect take you? Possibly all the way up here. Now, when I say possibly, Is it going to go straight up? Obviously not. But it might come up and do a J-hook pattern and then come up again. At least you know what your upside potential eventually could be based upon watching what type of patterns it does to get there. Kind of a good little scoop. There's your inverted hammer. That's what makes this a little bit more relevant. Remember what we said about the inverted hammer. But if it opens positive after an inverted hammer, you probably got a 95% probability or greater that you're going to be in an uptrend. Which tells us if it breaks out through here, where are we going? Up into that range. That's not a very big percentage move. I don't know what that scribble is. Anyways, there's a few today. That look extremely good. That's not one of them. What is that? Off by one. Now, how could I screw up? What did I just do? Well, that's right. PBF. These are the type of trade setups that are extremely high probability trades. When they bounce off the 50 after breaking through, strong upside potential. Eli, strong upside potential. Fun, strong upside potential. And cars. If this opens positive tomorrow, you got a McMuffin, high probability trade setup. So the analysis should be, where can we make the most money? There's a nice little J-hook scoop type pattern on nails. This one has the capability of moving up 7, 10, 15, 20% in a day because of the leverage. Okay, I think that's about all I've got. Looking for Viacom with the gap up right there. If this opens positive, got some good running room. How about a double doji sandwich? Okay, there we go. All right, so do we have any general questions on candlesticks? General questions. Nicole, I think that one, whoops. Yeah, that one's still a good looking chart. I'd be a buyer of this if it trades back up above today's open, giving you the classic fry pan bottom J hook. Let's see. Ron K. You have one that we need to look at. All of these are prospects for spreads. Yeah, so this one on positive trading can break out. Tim, it's if you margin your trade, that means for every dollar that you put in, the brokerage firm is going to lend you $1 so that you can buy $2 worth of stock. But the triple leverage means they have already margins for every dollar's worth of stock that they have bought in that ETF. They have bought $2 more on borrowed money. So that for every, so they've already leveraged that transaction. Which means if it moves up, it should move up a much faster percentage than one that's only 2 leveraged or just the normal ETF. Let's see. Are there any correlations between after hours pre-market trading and the moves it will make when the market opens? Not really. There's, after an earnings report, you might see a stock just whip around. Let's say Apple, for example, if it closed at 300 and they reported earnings, it traded 15 million shares during the day, it might run up 10 points, 20 points after the earnings, but it may have only done it on 4,000 or 12,000 or 15,000 shares. And then 30 minutes later, it could be down 20 bucks. So what it does after hours doesn't really have any meaning until you're right about 5 or 10 minutes before the market opens. Because that's where everybody's putting their orders in to either buy or sell on the open. And so that's the meaningful information. There'll be a lot of times where we could be doing a session this time of night, and the pre-market futures might be up 200 points. But when we wake up in the morning, it's down 400 points. All right, did you get the triple leverage, Tim? Okay, good. No, Joseph, there isn't. Is there a way to project that there's going to be a gap up the next day? No. But you do want to find things that tell you you've got that potential. For example, if you can see there is a resistance level and it closes right at that resistance level, there might be a strong probability of a gap up. We did a session, or in the session we did over the weekend, what we call the slow curve. And I'm trying to, the only slow curve I can think of is this one right now. Look at your slow curve. And it started coming out. And it's right there. That type of thing I might buy on the close. Not expecting that big a move, but maybe a gap up and a breakout. So there are times where you can kind of project, and usually the slow curve or even the fry pan bottom at the breakout level. Okay. Yeah, usually a scoop pattern is that flat handle. What did we look at for, let's see, with Sabre? Relatively flat handle. But there'll be a lot of times where you see where the trading just goes absolutely flat, and then all of a sudden you have the scoop. Okay, I guess with that, Jim, do the double line. And in 4.2 seconds, do the next double line. Okay, all right, Ron. DXC as a scoop. Yeah, kind of a scoop. A lot of times this kind of a junky handle. Usually they're just kind of as flat as a pancake, and then do the scoop. Okay, stamp. That's setting up as your classic fry pan bottom J-hook pattern. You can be buying this one on positive trading, anticipating the J-hook pattern. This is aqua. Another little scoop type pattern, but the breakout through the 200 is relevant, especially gapping up through that level. So the gap up into a resistance level is significant, because if everybody and their brother can see that this is a resistance level and they're gapping up to get there, they're probably going to go through it. It's showing that that resistance level is not going to act as resistance. Right now, ITSY, you stay long, but you've gapped up. Should be moving higher, but you put your safety stop at today's open. Mark, another classic fry pan bottom J-hook pattern. You can still be buying this one. If I was buying this one tomorrow, I wouldn't want to see it close back below the halfway point, and definitely would have a stop below the T-line. HPQ. Gap up through the resistance. Expect more upside. OPK. Just stay long. Kind of your J-hook pattern right in here. Melly. Still, notice how it used the T-line as a support. Little left-right combo. Still in an uptrend. It's what we always told my mother. She looked so melancholy. She had a face, her head like a melon and a face like a collie. Boeing stopped its slow drift. I wouldn't be a buyer of this one until it gets up through the 50. But if I had been short, I would have covered the short today. Valero, that one's got that little scoop type pattern. You can be buying this with the expectation that if it gets through here, it's coming up to the 200. MTB. If I was short, I would have covered the short, but not a real spicy chart to go long, which means I probably wouldn't be long or short if I closed it out. AERI, another scoop bouncing off the 50, target 200. Bed Bath & Beyond. Another little scoopy type pattern, but look at your left-right combo. So if it opens positive tomorrow, what's happening? Bullish doji sandwich, breaking out through this level, more upside. XOP, there's that proverbial scoop. Off the 34, doji, best friend gap up. Stay long. The SPY, trying to get up through the 200. PayPal. Another J-hook pattern. You just stay with it. So here's a good example of, if that was your gap up, where was your stop? Right there. You didn't want to see it close back below that level, which it didn't. And Uber, another one where you just kind of stay long. It's not a real great chart, but it's, so all you can do on this one is stay long as it stays above the T-line. LPCN, that's a nice fry pan bottom breakout. You just stay long with the anticipation they're heading for the 200. And And Brinks, Morningstar signal. You can buy this one. First target is up here at the 50. Boston Scientific, another little scoop type pattern. So you can see there's tons of these. So you want to be, if you're long, you can stay long. You want to be buying any one of these as long as it stays above the T line and continues higher. Lattice, little gap up. That means if you closed it out here, you can be buying on positive trading here. It's telling you that that J-hook type pattern is still working. Tech, another kind of fry pan bottom, little gap up through this resistance level. Stay long on this one. Gold was kind of sloppy today. Look where it got sloppy. Right at the same level it topped out before. So gold might be hovering in here a little bit. Silver was acting a heck of a lot better, though. Electronic Arts. If this doesn't make a big move tomorrow, look what it's telling you. It's not going anywhere. I would close it out. If you like it, you can always buy it back if it comes up through this level, telling you wave 1, wave 2, wave 3. But right now, look at your stochastics. Look at your doji right at the end of flat trading. You don't know whether it's going this way, or this way. So you've taken out all the probabilities of, or probability advantages of being able to analyze which way it's going to go. So take your money and go find something where the probabilities are much greater in your favor. Kimberly-Clark, not anything real wild and exciting. If you like this, it has to open positive and trade positive. Space, nothing. It lost its flare when it kind of hit this top of the resistance level. I'd be someplace else. eBay, all you can do is stay long. CMP. You can buy it with the idea that it's coming back up to the top of the channel, but you can see obviously there's a channel. We did silver. RY. Scoop type pattern. Little best friend gap up. You can be buying it. There's a gap right here. And IYT, is that the transportation? Yes. That's got a good chart to it. Tesla. Tesla was trading stronger today. I think, I don't know what I only half heard it, but I think if they have 4 quarters in a row that are positive, they get listed on the S&P 500. And if that's the case, all the institutions that have to be buying S&P stocks have to buy it to put in their portfolio. Bidoob. Not a great reversal. It's not, oh, maybe it is. Kind of a belt hold signal. I would watch to see if it can get up to the 200-day moving average. RVNC, a J-hook pattern, just stay long. Rite Aid, fat fingers. Rite Aid, I wouldn't be short, but I probably wouldn't be long. I mean, you're still on a junky sideways on that one. Boeing, we did. I wouldn't be short anymore, but I wouldn't be long right yet. AGNC, if you like this one, you can buy it on positive trading, which means you'd be breaking out kind of on a double doji breakout. And that pays, is that the one that pays 14%? Anali, Also, you can be buying it, pays good dividend. And CBL, don't know what to tell you there, 20-cent stock. Sean, nothing there yet. Just make sure your volume is in the multi-millions. Rigs got kind of that fry pan bottom cup and handle. You can buy this one on Positive Trading also. Make sure the volume is huge. And Wi-Fi, you can buy this one, especially if it opens positive, giving you a J-hook type breakout. eBay we did. Just stay long. E-Dog. There's your fry pan bottom. There's your consolidation. There's your J-hook. You can still be buying this one. Zenga, all you can do is stay long if it stays above the T line. Chewy. If this opens lower, close it out. It's going to be in a sideways wedge. CLDR needs to open positive and especially break through the 200 or you're still going to be stuck in the sideways. AQST, stay long. J-hook pattern starting again with a best friend signal. Another J-hook pattern on TMUS. You stay long on this one. ERI, little breakout, stay long. Occidental. It needs some more strength. It needs to get out of here. We did stamp. That was the first one we did, didn't we? Stamp, J-hook pattern, stay with it. And AZUL, we did that earlier. That's a nice breakout. So if you're buying it, it has to break this downtrending channel and then break the 50. Home, nice fry pan bottom, stay with it. Halliburton, stay with this one. Trying to get into the gap area. Then the 200. Sava, they had a bad clinical trial of some sort. Give has to that you have high hopes for. Darren, you'll have to retype that. Marriott started back up. There's your bullish doji sandwich. American Airlines, not real vivacious. I would probably be trading something else. OUS. Darren, you got me there. Walmart. Walmart, if you like it, you can be buying it. It's just not a huge mover. Maybe it's coming back up to this level, but so if you like it, you can be buying it on Positive Trading. Oh, see, FTNT. J-hook pattern, stay with it. Bristol Myers. Bearish left-right combo. If this opens lower tomorrow, I'd probably lighten up on this one. And then if it definitely closes below the T-line, I'd close it out. XLK, J-hook pattern, you can buy on Positive Trading. I think we did PayPal, J-hook pattern. Apple's got a very good looking chart. Get ready to buy this one on the next wave up. Abbott Laboratories, nothing. Nothing. I probably wouldn't be long or short. CLDR, you can buy in positive trading. JP Morgan. The financials are going to do well, or if the financials are doing well, the market will do well. So you want to stay long, but it has to get up through the 50. You got a lot of junk right in here. Verizon, not anything to write home about. I wouldn't be short, but I probably wouldn't be long right now. There's better charts out there where you want to find something with a good, strong signal. JD.com, big breakout. You stay long on this one. You're in the overbought area, so I'd put a stop at today's open. It gapped up. Well, I think they will stay financed on the cruise lines. So you got your little Morningstar signal. You still have some prospects. Yeah, but they will get whipsaw based upon news. So you can be buying them. Just be careful. QCOM needs to get up through the 50. You could be buying that one on positive trading. And a little scoop type pattern on EPR. Gap up here, so that's a decent 25% upside. Zoom was in a slow uptrend until they opened it and traded back below the previous day's open. Let's close this one out. I think we already looked at this at some point in time. But notice your dark cloud right here. And notice they gapped it down. If this doesn't open positive, if you're long, if it opens lower, close it out. That means they've run into resistance up in this area. And Beyond Meat is slowing down. There's your bearish left-right combo. Look at your shooting star, your shooting star, your doji, your doji. Bearish left-right combo. If I'd been long today, I would have closed it out because that left-right combo is kind of your final nail in the coffin. And it's doesn't need confirmation. It's a strong sell signal. E, can't help you there. That's nothing. JB, how do you come up with such flat charts? That's just, that needs something to get you out of this junk area. Walmart earnings tomorrow. All right. Free burial seat. Well, that's funny. That might be your not dark cloud, but your bearish belt hold. It has to open positive and trade positive. If it opens lower, you're still in a 45 degree, but you're running into trouble up here. Yeah, bearish belt hold type signal. Was Team E. Chegg, another one. If you're in an overbought condition, put your safety stop at the previous day's open. Because if it comes down through there, where do you think it's heading back to? The T-line. Wouldn't go short, but I'd be out of that trade. Okay, everybody, we got a market that is now going to allow us, hopefully, to at least be in the strong signals and patterns, because doesn't look like anything, unless they do a big, huge reversal tomorrow. Investor sentiment's kind of mellowing out. It's not in any danger of being in a downtrend. It might not be in a big uptrend, but at least if it's trading flat or positive, we know the bullish charts or the bullish sectors are going to continue to act bullish. So with that, Dow head and double shoulders. Nah, just a sideways. Okay, we'll see everybody bright and early. Where would you place the bottom trend line for the Dow? Back below the 50. If they were able to bring it back down through there, that's trouble in River City. Okay, we'll see you in the chat rooms. We'll see you.